What is P2P trading, and how does it work in peer-to-peer crypto exchanges? Peer-to-peer trading is a type of cryptocurrency exchange method that allows traders to trade directly with one another without the need for a centralized third party to facilitate the transactions. It's beneficial to both parties as they get to select their preferred payment method and a price on which both parties agree. How does a P2P exchange work? Some people compare a peer-to-peer exchange to marketplaces like Craigslist or Facebook Marketplace because P2P exchanges connect crypto buyers and sellers. Buyers and sellers can browse crypto ads or post ads of their own. P2P exchanges can also provide a layer of protection for everyone involved in the transaction by implementing escrow, feedback or rating system. Picture this as you meet someone on Twitter who is interested in buying Bitcoin, and you happen to have some Bitcoin to sell. Twitter is not a P2P platform, so it is difficult to establish trust. What happens when the buyer gets the Bitcoin but doesn't send the payment? What happens when the buyer sends a lower payment amount than expected? Fraud is the biggest risk of conducting P2P trades without an exchange. P2P exchanges have more flexible payment options than regular centralized exchanges. To take advantage of this, post buyer-friendly ads and take more flexible payment options for your cryptocurrencies. The more fluid you are about the payment methods you accept, the quicker you will likely make a sale. The wait is almost over. Coindhan is soon to launch something that can help reshape your digital assets trading experience. Something really exciting with unique features is on its way. Till then, visit www.coindhan.com.